Hey everyone, welcome back to Corporate Decoder. Today, FLYE Group Incorporated, ticker FLYE, just filed a current report, and I am seeing one red flag that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company faced a potential delisting from Nasdaq, but it looks like they managed to get back on track. Alright, let's dive into what happened with FLYE Group Incorporated. This is a current report, basically an announcement of significant events. The big news here revolves around Nasdaq. The company received a warning from Nasdaq on the 27th of July because they weren't meeting the usual requirement to file their financial reports on time. Think of it like getting a notice from your landlord for not paying rent on the exact day it is due. Nasdaq has rules about companies keeping up with their filings, and FLYE Group missed the mark. This notice essentially said the company was out of compliance with Nasdaq's rules for ongoing financial reporting. Now, this is a serious issue because if a company can't even keep up with basic reporting, investors start to wonder about their operational health and transparency. It can lead to a stock being delisted, meaning it stops trading on a major exchange like Nasdaq. But here is where the story takes a turn. Just a few days later, on the 27th of July, Nasdaq reviewed the company's latest filing, which was their Form 10-K for the period ending the 31st of March 2026. And guess what? That filing corrected the issue. The staff at Nasdaq determined that FLYE Group Incorporated now meets the listing rule. So, this particular problem is officially closed. It is like getting a late notice, but then showing you've paid up and the issue is resolved. The company's common stock trades on the Nasdaq stock market LLC under the ticker symbol FLYE. It's a company in the auto manufacturers sector, according to the research context, but with a really small market cap around $3 million. The stock price has been incredibly volatile, trading between $1.62 and a whopping $161.8 over the last year. This kind of swing suggests a lot of uncertainty or speculation around the stock. FLYE Group Incorporated has opted to be treated as an emerging growth company. This means they get some flexibility with financial reporting until they reach a certain size. They haven't elected to use the extended transition period for new accounting standards, which suggests they are trying to get ahead of those changes, or are confident in their ability to adopt them sooner. The filing also lists out the exhibits. The main one here, Exhibit 104, is the cover page interactive data file. This means it is an electronic document that can be read by computers, making it easier for regulators and data analysts to process. It is formatted as inline XBRL, which is a way to present financial data in a human, readable and machine-readable format at the same time. The report is signed by Joe Oh, the Chief Executive Officer, on the 29th of July 2026. This signature confirms that the leadership team is aware of and responsible for the information presented in this filing. Now, looking at the broader context, FLYE Group Incorporated has been in the news recently. There was a headline about the stock rallying over 12% in after-hours trading back on the 24th of July, but then another headline on the 28th of July showing the price actually dropped a bit. This kind of seesaw movement combined with the delisting warning paints a picture of a company that is facing significant challenges and a lot of investor uncertainty. The fact that they had a delinquency notification from Nasdaq is a classic sign of operational or financial distress. Companies that are struggling often have trouble meeting their reporting obligations. While they seemingly resolved this specific issue very quickly, it does highlight potential underlying problems with their internal controls or financial management. Consider what happened with companies like Bed Bath & Beyond or Rite Aid when they faced similar reporting issues or financial strain. While FLYE Group Incorporated is much smaller, these kinds of events can be precursors to larger problems. When a company is flagged for not meeting basic requirements like timely filings, it's a signal to be extra cautious. It is a bit like seeing a small crack in a dam. It might not be a problem now, but it's something to keep an eye on because it can grow. The research context shows a market cap of just $3 million and a stock price that has been all over the place. This suggests it is a very speculative stock, likely much smaller and less stable than major auto manufacturers. The stock price history, with lows near $1.6 and highs over $160, is extremely unusual and points to potential manipulation or extreme market sentiment swings, rather than organic business growth. In terms of the company's direction, the immediate strength here is their ability to resolve this Nasdaq issue swiftly. They got the warning, and then they filed the necessary report to get back in compliance. That shows a certain level of responsiveness. However, the consistent news about late filings and volatility is a significant weakness. It suggests a lack of consistent operational management. The biggest concern I have is the extreme price volatility and the history of late filings. While this specific filing was resolved, the underlying issue of missing deadlines is a red flag. What I am actually looking for is consistent financial reporting and a more stable trading pattern before considering this company a serious investment. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this analysis valuable, like this video and subscribe for more and join our Discord community.